Hi, everyone, and welcome to the Wealth Suitcase, the channel that unpacks all things finance for South Africans who want to grow their wealth, master the money game, and become truly financially savvy. Today, we will be discussing one of the most controversial topics: how the rich avoid taxes in South Africa. So let's get right into it. Why do millionaires in South Africa pay less tax proportionally than middle class? How do they own holiday homes, fancy cars, and multiple businesses, yet report almost no taxable income? It's not a scam, it's strategy. And today you're going to learn the exact legal methods they use and how you can start applying them too. Here's the uncomfortable truth. South Africa's tax system, like many around the world, rewards investors, not workers. A salaried employee pays up to 45% in income tax. But a business owner or property investor, they can legally pay far less using deductions, depreciation, and structured investments. If you own a property, you're sitting on a gold mine of legal tax breaks. This has helped landlords and property investors save hundreds of thousands every year. It's called depreciation. And when paired with other smart deductions, it becomes a powerful tool to legally reduce your income tax. Let's say you own a rental property in Cape Town, valued at 1.5 million rands. If you rent it out, you can deduct almost every expense related to it: bond interest, levies and rates, insurance premiums, maintenance and repairs, property management fees. But here's where it gets really interesting. The structure of the building itself can be depreciated over time, even if the property value increases. Under current SARS guidelines, residential rental properties can qualify for a depreciation allowance on the building, often at 5% per year over 20 years, depending on its use and classification. These are called capital allowances, and they reduce your taxable rental income on paper without affecting your actual cash flow. Now, let's look at how going green can save you hundreds of rands in taxes. This is where Section 12B of the Income Tax Act enters the chat. Basically, this is a legal tax shortcut that lets you deduct 100% of the cost of solar and renewable energy systems in the first year. Let's say you're a business owner and you install a solar system for your office worth 300,000 rands. Thanks to Section 12B, you can deduct the full amount immediately, saving 84,000 rands if you're taxed at the 28% company rate. And here's the kicker. In 2023, the government went even further with a temporary boost called Section 12BA, allowing businesses to deduct 125% of solar panel costs in 1 year. This isn't just for corporates either. If you're a landlord, farmer, or small business owner, these benefits can significantly lower your taxable income while future-proofing your energy needs. And then, of course, there is offshore investing. While this can be a complicated process, it is one of the ways the wealthy are utilizing to cut taxes. With SARS approval, South Africans can invest up to 10 million rands offshore annually. The key is to disclose everything properly. And finally, let's talk leveraging against assets. Here's the logic. When you sell an asset like property or shares, you trigger capital gains tax. In South Africa, that's up to 18% for individuals and 22.4% for companies. But when you borrow against that same asset, you get cash in hand, tax-free. To put this into perspective, let's say a property investor in Sandton owns a property worth 5 million rands, fully paid off. Instead of selling it and paying capital gains tax, they take a 3 million rands bond against the property and use that cash to buy a second property or reinvest elsewhere. And ultimately, if there is no sale, there is no tax. And guess what? The interest on that new bond is often tax deductible if the borrowed funds are used for investment or income-generating purpose. Now, imagine doing this with shares in your business, investment portfolios, or even within a trust structure, creating a liquidity pipeline without giving up ownership or triggering tax. And that is the wealth suitcase scoop banks don't share with you. If this video opened your eyes to how the rich really protect their wealth, imagine what you'll gain by sticking around. So go ahead, hit that subscribe button, give this video a like, and drop a comment if you want us to dive deeper into any of today's strategies. Remember, The path to financial freedom isn't about working harder, it's about thinking smarter. Keep packing that wealth suitcase and let's build your legacy.